Whether you are a long-term investor managing your retirement portfolio or a short-term day trader, there is one thing that will make your performance markedly better. I'm going to explain what that is this week. Plus, I'll do my regular weekly market analysis. We'll figure if there's a crash coming, and we're going to go through the sectors to see where there's strength and opportunity and what are the groups best avoided. All right, welcome to this week's Market Minutes. Let's start off with our analysis of the overall markets, and then we'll get into that one thing that is so important for investment performance. We'll look at some sectors as well. But starting off, we'll take a look at the S&P 500. The ETF that I like to look at is SPY, and it is here on screen in a weekly chart. You can see, as we've talked about many times, the upward trend was broken a few months ago, and we've built this falling top here, and this sets up for some concern. If we break down through this floor from a falling top, that could lead to a significant market sell-off. This has not happened yet, but it is something to be cautious about. I do think that we are building this pessimism, and so big picture for that large cap sector, you want to be fairly cautious. Now, we also like to look at the short-term chart, and just to get a sense of what the shorter term move is looking like for swing traders and day traders. And here you can see that hourly chart going back 30 days, and we've been locked in this downward cycle for about 10, maybe 15 days, not quite 15. If we can break up out of this, then that would be positive, but until we do, short-term traders should be pretty cautious. So my short-term rating on the S&P is negative, bearish, and my longer term rating is neutral, but with some caution because we could break down. All right, let's take a look at the NASDAQ 100, which is going to be fairly similar to the S&P, but it is tends to be a little more volatile. This is again the 3-year weekly chart, and you can see the upward trend has been broken. We've built this falling top. See the stock scores, the sentiment stock score is at 39. Look at how it's been falling the last number of months, and that's because upward momentum has slowed. The sellers are in control. Until we break down through this support zone, I'm not going to be bearish, but this is at best a neutral chart right now. We'll have to see if it can hold that support zone at 320. Looking at the short-term chart, the 1 month, similar situation as the S&P. It has been drifting for the last couple of weeks, and therefore caution is warranted. I would rate this bearish. All right, let's take a look at the small caps, which do have a fairly different chart than the large caps. You can see that they didn't enjoy the same upward trend, and so they haven't given back as much of the gains. It is still building falling tops. That's a sign of pessimism. We've got support in this zone. If we were to break down on the weekly through that support zone, that would be a bearish signal. I'm going to give this a neutral rating for now, but some caution is warranted given how we are threatening that support zone. Onto the Canadian market, which has held up much better than the US because of the concentration of commodity stocks. There's the 3-year weekly on the Canadian market, and we're going to give that a neutral to slightly bullish rating. It is breaking to new highs in the last month. However, the momentum is really slow. We've essentially been sideways on the Canadian market for the last number of months. And there's opportunities in this market. We're going to talk about where those are in just a minute, but you want to be selective because many areas of the Canadian market are not all that great. Let's take a look at the 1 month just to get a sense of that short-term picture. And you can see we're starting to build a little bit of pessimism. We can say pessimism when there's falling tops. So we've got falling tops on the chart. If we were to break down through support here, that would be a negative. For now, I'm going to give this a neutral rating as well. All right, let's take a look at some of the commodities now. GLD is the first one. This represents gold. And you can see that this week, gold broke this little mini flag pattern. So gold rallied up to the highs, which was set in 2020, the late summer of 2020. We hit that this year. We got stuck, very normal. And we pulled back for about a month, and then broke this past week. It'll show up a little more clearly on the intraday chart. This is the 30-day, 120-minute. Let's make it an hourly chart. I just click on 60M and that makes it a 60-minute chart. And you can see how we've gone from the sellers being in control, okay, falling tops, to now the buyers being in control, rising bottoms. And so that's a real switch in momentum for the gold stocks. And I think, well, this is gold itself, but I think that opportunity is starting to build in the gold sector, limited by the resistance at those highs, but I still think there's pretty good upside to that level. And so I suggest perhaps looking at some of the gold miners this coming week. We may see opportunities there. Don't take them unless there is some action, but that could happen this week. All right, let's move on to oil. I like to use USO as my proxy for crude oil. And what you can see there is we are in a good long-term upward trend. We've run away from the trend. So that was a motion pushing things a little too high too quickly. Anytime you go parabolic, you typically come back to the trend line. Now you can come back in two ways. You can go sideways for a while until you hit the trend line, or you can sell off and then bounce off of the trend line. What we've been doing the last 4 or 5 weeks is going sideways, something that I call a consolidation. So we're building a base, building a foundation for the market to move up off of in the future. I'm not eager to be chasing oil stocks higher here because so many of them are well into their upward trends. They're risky to be initiating a position. However, if you own them, probably no sell signals on them. They've been doing well. They took a little break for the last month. They're starting to perk up again this week. And I think that if you're long of oil stocks, stay long. Let the trend work for you. It's one of the few sectors that is doing well. All right, moving along, we'll take a look at UUP. UUP is the US dollar. And you can see there the US dollar is doing well. Nice upward trend. And that looks likely to continue. We are at the top of the channel, so typically you pull back into the bottom of the channel when you get up to the top, but the buyers are in control of the US dollar. It looks like a lot of money looking for safety in the US dollar given what's going on around the world. We can take a look at some cryptocurrency as well. I always like to take a look at GBTC or Ethereum, ETHE. And Bitcoin's been trying to bottom. It's done a pretty good job of stopping going down, but it has not really built any upward momentum yet. So I would call it a neutral chart. It's not particularly weak or strong. It needs to start to get some volume into it. You can see how the volume has just been falling off here, and that's an indication that the excitement is going away. People aren't so interested in trading crypto right now. And so I think generally it's a place to avoid, not because it's bad, but just because it lacks action. All right, also like to take a look at TVT, which helps me understand where interest rates are going. And of course, we've seen central banks raising rates. This is the inverse ETF for US Treasuries. When this goes up, interest rates go up, and you can see that it's going up parabolically quicker. And that tells the story really that interest rates are rising. And if you're looking to lock in a mortgage, you probably should have done it already. And if not now, maybe wait for a bit of a pullback because it is going a little bit parabolic. But the general outlook for interest rates remains, I guess, bullish or likely to go higher. We do have this area of resistance up in here where we may get stuck and then pull back. I would say, though, that the market's telling us interest rates are rising and the expectation is that is going to continue. All right, so next thing what we're going to do is talk about this one critical thing that will have a major effect on your performance in the market. Now, before I do that, I want to let you know that I have some webinars coming up in the next week or two, and they're free. They're like an hour long. They're going to go much more in depth into how I analyze and trade the stock market. So if you want to join up on those, just go to the Stockscores website, go to Trader Training, upcoming events, and there you can see the titles and register for any of those. We have webinars on how to invest in the market profitably, how to be a day trader, how to avoid stock market crashes, find hot stocks. You can check out all the titles there. All right, so what is the one critical thing that's going to dramatically improve your performance in the market? Well, very simply, it is to trade with the sector that is strong. the market that is strong. So often we fight an uphill battle by trying to trade in a sector that is out of favor. So we're going to look at the sectors in just a moment. We're going to go through the Canadian and US sectors. And what you're going to see is that many of them are quite weak. A few of them are quite strong. And if you focus your trading efforts in those sectors of the market where there is strength, you put the wind at your back. I like to use this analogy or metaphor about how the stock market works. There's two forces that move a stock. There's the alpha force and the beta force. The alpha force is specific to the company. So if a gold mining company discovers a new deposit of gold, that's going to move their stock up. That's something specific to that gold mining company. But then there's also the beta force. This is like the wind in the sails of a sailboat. It is the factor that is the overall market or the overall sector that can help that particular stock do well. So if gold prices are moving higher, then generally all gold mining stocks are going to move up. So we have sailboats and we have motorboats. Sailboats are the part of the stock's performance that is related to the overall market, and the motorboat is that specific performance related to the individual stock. Now, some stocks are both. Some stocks get moved along by the wind of the market, and other stocks can only move because they have their own power, their own motor, and that is the alpha component. All right, so with that in mind, what we want to do is go through the market and look at the individual sectors. And we're looking at the Canadian market and the US market. And if you just want to favor the group that is building momentum or already has upward momentum on its price chart, you're going to do a lot better. All right, so let's jump back into Stockscores, and we're going to go to the charts menu. This is a free tool on Stockscores. Anybody can use this. Go to the slideshow chart viewer. You must first create a watch list, and what I've done is I've created a watch list of Canadian sector ETFs and another one I call sector ETFs. That's the US. So we're going to look at Canada sector ETFs first, and it brings up these little charts. I'm going to click on large charts down in the bottom left. So now I can see a nice big view, and this is the diversified monthly income. So it's essentially a dividend sector chart. This particular chart shows me that it's stuck up against some resistance, doesn't look all that strong. In fact, if anything, a little bit weak. You can see the stock scores are in the red. So I'm not too eager to play that group. Energy, well, here you can see the buyers are in control of energy. The bottoms are rising. We've gone from this linear trend to a much steeper one, which means that there's risk because this sector has gone up so much. And that tells me, okay, great area to own, but chasing these stocks now is getting risky because it's already well into the trend and it's gone parabolic. So be very cautious about initiating positions, although maybe day trading or very short-term trading is fine. But starting to build long-term positions when prices have gone up this much is risky. You'd rather wait for a pullback and buy on the break of a pullback, much like happened back here. You know, it ran up, it pulled back, and then you buy when they break the pullback or there. Right now, we're too far gone. I'd like to see a pullback and then a break of a pullback. That would be a place to enter. All right, government bond index, you can see that it is going down. That means interest rates are going up. If you're wondering where interest rates are headed, the market is predicting that they will continue to rise. Now, this has gone parabolic to the downside, which means there's a little bit of fear in that market, and we're maybe due for a little bit of a bounce back in the short term, but still the trend is down, and therefore your expectation for interest rates are that they are rising. Here's the REIT, which is your real estate investment trust, stuck in a sideways range, not weak, not strong, not an area of much interest. Capped materials, so this is your, the things that hurt when you drop them on your foot, the steel, the copper, that kind of stuff. Material stocks are strong. That is a sector that has upward momentum. Gold, upward momentum, a positive sector. So we've got energy, materials, gold, all commodity based. That's a place to be. Dividends has good long-term upward momentum. The dividend stocks, so these would be the big banks and that sort of thing that pay a dividend. But in the last 3 months, 4 months, they've been a little sleepy, a little bit sideways. And so I think you got to be picky about what you take in that group. Here's the TSX 60 itself. The Toronto Stock Exchange market generally looks good, but maybe lost some momentum in the last 6 months. And finally, Infotech, not finally, second to finally. Infotech, so this is your technology stocks in Canada, weak. This is an area to avoid. Stay clear of technology. Financials, they have been very good, but in the last 2 months, they're now starting to break their upward trend line. They're building a falling top. So be cautious with the financial stocks in Canada. All right, so that's a overview of the Canadian market. Basically, commodities, a good place to be. Everything else, not so much. Let's do the same analysis for the US market. So I can go into sector ETFs. This is another group that I built. Got 23 charts to look at here. And the first is the financials. Like the Canadian financials, starting to build falling tops, starting to test support. Hasn't broken it yet, but that's a concern. That's why our stock scores are low there. So be cautious with financials. There's your gold miners, looking pretty good. Coming into a ceiling, however, which limits upside. So they're good, but the upside is somewhat limited. Energy, strong, but perhaps a little too strong, running away from the trend line. Banks, again, you see it breaking down through some support. I think this is an area to avoid. Junior gold miners, looks like a good place to be. Not a great place because there is resistance to deal with, but the stock scores are good because we're building rising bottoms and breaking through different levels of resistance. We've got more to work through, but generally I like the junior gold miners. Home builders broke their upward trend a couple of months ago. A place to avoid right now. Of course, with rising interest rates, you can understand why. Regional banking, best avoided. Metals and mining, strong, but a bit of a chase. It broke out 2 months ago. Buying it now is a little bit of a chase. Utilities, looks strong. This is a place to be looking for opportunities in utilities stocks. Retail, best avoided. The momentum is down. The sentiment stock score is weak. Consumer staples, looks good. Sentiment stock score at 80 in an upward trend. Probably pulls back in the very short term, but I like it longer term. There's energy again. Materials in a sideways range here. So US materials sector, very different than the Canadian. It is stuck in a sideways range. Watch this group for a breakout. If it can break out through that resistance, we could see that move higher. Keep an eye on that one. Telecom, broke down 3 months ago. I would say best avoided. Industrials, stuck in a sideways range, a little bit of a falling top, so some concern, not terrible yet, but a little bit of concern there. Real estate, holding its long-term upward trend. My concern is falling top. That could turn into weakness. Watch for a breakdown there as a strong signal to be bearish. Biotech, this is the group that I'm keeping an eye on because it could turn around. It's been weak for quite some time, almost, well, not quite a year, maybe 8 months, but it is testing that downward trend line. If it can break this downward trend line, then it turns into a bullish situation. For now, it is still caution warranted, but keep an eye on it. Healthcare looks relatively strong, trying to reach to new highs. Some volatility, so there's uncertainty there, but I think individual stocks in the group can do well. Here's oil and gas exploration and producers, looks good. Technology, not good. Consumer discretionary, not good. Semiconductors, not good. Oil service, good. That's it. So that's a quick overview of how I, on a regular basis, try to put the odds in my favor, because I would love to own stocks that have strength on their own. That's the motorboat factor, but also have the wind blowing in their direction. That's the overall market. That's what can help these individual stocks do well. You will do much better in the market if you are trading with the trend of the sector. We've looked at what sectors are strong. It's mostly commodities. Perhaps biotech will turn soon, but it's not there yet. But keep doing this analysis on a weekly basis and you will discover the real places to be in the market. And of course, I'll do it here for you as well. So subscribe to the channel. That way, when I upload a new video, you'll get a notification. Make sure you click on the notifications bell for that. And I hope you've enjoyed it. If so, click on the like button. Is there a sector that you think we should be looking at? Leave a comment below and I'll always take a look at those. Hope you've enjoyed it and trade well.